let's be clear, Bitcoin is an international asset.
We are spending like drunken sailors.
Bitcoin is the only economic entity where the supply is unaffected by the demand.
If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable.
Welcome back to Scarce Assets, a podcast by Onramp Institutional. In this episode, we sat down with Josh Phair, founder of Scottsdale Mint and the Wyoming Reserve, who brings 20 years of experience in the precious metal space. We unpack the convergence between precious metals and Bitcoin, the sound money thesis behind both, and why nation states are reclaiming physical ownership of strategic assets like gold and soon, we believe, Bitcoin. At Onramp, we help institutions prepare for the shift. Our multi-institution custody eliminates single points of failure and provides the foundation for secure long-term Bitcoin ownership. We work with family offices, pensions, and endowments through investment vehicles like the Onramp Bitcoin Trust, which offers security-like exposure similar to an ETF, but with in-kind delivery, multi-jurisdiction custody, and multi-institution custody, allowing for direct ownership of Bitcoin. We also offer advisory services for institutions navigating this new asset class who want to avoid the pitfalls that investors have historically fallen into. If your organization is thinking about Bitcoin or already beginning to allocate, we would love to talk. Shoot me a note, jackson@onrampbitcoin.com, or book a consultation on our website. Hope you enjoyed this week's episode. Okay, we're recording. It is another episode of Scarce Assets. This week, we're joined by Josh Phair and my co-host, Michael Tanguma. Josh, thank you for joining us. Just a quick intro in my words, and then want to hand it over to you to give a little bit more context on your background. So you're the founder and CEO of Scottsdale Mint and the CEO of the Wyoming Reserve, which I did a little bit of homework ahead of this call yesterday. Pretty fascinating concept there, but I'm looking forward to diving into your professional background today, spanning precious metals, but also the Bitcoin space. I guess you think of yourself as a sound money guy, which I would say the two of us do as well. So thanks for joining us, Josh. How are you doing today?
Yeah, thanks for having me. Doing well. It's July here in Wyoming. A lot of rodeos, concerts. It's a good time to be here and not traveling, frankly.
I love it. Well, yeah, it's a pleasure to meet you. Excited for this conversation. We have a lot of people on that focus on Bitcoin and digital assets, but we have less conversations focused on the precious metals market. So I think this will resonate with a lot of our audience because, as you know, just kind of a similar thesis behind gold, silver, Bitcoin, thinking about the fiscal irresponsibility of the government, geopolitical concerns, et cetera. But would love to just give you an opportunity to express more about your, let's say, core philosophy, investment thesis around precious metals, how you got involved in the space, and then we can see where that takes us.
Yeah, sure. And to make sure those watching that might be digital asset friendly, I am pretty much the opposite of Peter Schiff. So yes, definitely stay tuned to the chat today. So I was one of the odd ones that originally wanted to go into finance. Was an intern at Smith Barney when I was in college. And then 9/11 happened and ended up changing my major to risk management, and then got into the brokerage world. And when I was 20, I think it was about 24 years old, I landed a $1 billion gold mining company as one of my clients. Essentially handled anything from trade credit to political risk to managing their gold and movement of materials, solve problems, environmental things, all sorts of stuff, but solved their problems and then got referred into other mining companies. So ended up running probably close to about a dozen publicly traded mining companies, gold, silver, copper, and pretty much mainly worked directly with the CFOs. And so I got to see kind of the hedging, the capital deployment, just everything, and really fell in love with metals. And this would have been pre-financial crisis. So me in my 20s, the only crisis I saw was the .com blow up, which is kind of why I decided who's going to give a 20-something-year-old money to manage when I didn't understand, as a younger kid, didn't understand what I call the brick and mortar world. And when those .coms blew up in 01, it was pretty much a smooth sailing, for the economy up until '08. And when that crisis hit, I had an idea and it ended up implementing it and started what's now known as Scottsdale Mint in '08. It started in my guest bedroom. It was essentially, I wanted to create a brand within the precious metal space that wasn't just chasing after grandma's money, something that was a little bit more attuned with how things are done today. And fast forward now, what's been almost 17 years, Scottsdale Mint manufactures for 20 plus foreign governments, central banks. So we produce their legal tender gold and silver coins. We do stuff for private banks, large private banks. We make anything from the investment grade product to collectibles, gifts, everything in between. And actually later this year, we'll be launching home goods. It might be next year, jewelry, where we just produce really anything to do with pretty much anything to do with precious metals. And my other company that you mentioned is called the Wyoming Reserve. That is essentially a vaulting operation. So it's a high security vault operation that works just like the JP Morgans of the world. JP Morgan is one of the largest holders of silver in the world. They have quite a bit of gold right next to the Fed. Then they operate that vault. They make money on third-party storage, and then they take their assets that they also own, and they find a way to create business income off of that. And so our vaulting operation is not too dissimilar from that, except that we're an opportunity zone. So our equity investors in our stock get special considerations with capital gains, potential tax-free appreciation on our stock, et cetera. But we're also in a foreign trade zone. So our vault operation is actually not subject to tariffs. So we can bring things in that are being tariffed, store it in our facility. It could be held here essentially forever, or shipped back outside the United States, tariff-free. And part of that vaulting operation is actually built for where we're headed, which is as the real-world assets go onto the blockchain. So that's been essentially a passion of mine for a long time. I have held Bitcoin on the balance sheets of my companies for longer than Michael Saylor has. So I just don't use the debt strategy that he does. So I'm while I'm very much focused on precious metals is kind of the old school. It's been around for thousands of years, and it's not going away. I do think those that thought gold was going to go away, I think 2025 has signaled to the world it is now outperforming bonds at basically any interval that you look at. It's now beating almost most of the stock market over the last 25 years, and that's even with the S&P switching out. Who's in their pool. So yeah, I think over the last 17 years, it was Austrian economics for those that paid attention to the Roger Vers of the world. That's how he got into Bitcoin. I was not as smart as Roger. I was on a website and I was looking at the Bitcoin price. It was around $1, and I was on the website looking at it, and I said to myself, "This feels like kind of like Dungeons and Dragons and Magic: The Gathering. It's just like this isn't for me." So I did not click the buy button. That would have been really good at the time. And that's actually that's for those that don't know, that was kind of how that was the Bitcoin community. That was Mt. Gox was essentially Magic: The Gathering guys that really launched a lot of these things. So it's very interesting. So I've definitely watched the evolution of, I call it the digital assets, the thesis that, of fiat currency that no one even knew what it was. They thought it was a car only, just seeing that evolve over a long time. So that's kind of a really fast, kind of quick overview, and then we can definitely dive into things a little further.
Yeah, I appreciate you running through that and been super excited to have this conversation. I thought I was a little early to thinking about the gold and Bitcoin, not only trade, but how they're going to play out. But it sounds like you were way early, about 20 years early, in the sense of there's a few themes you touched on. One is I didn't realize, and that's awesome, about working with sovereigns on the legal tender stuff. I think there's a notion of in the Bitcoin space, people understand there's the right and wrong ways to do them, and that are filled with counterparty risk. And I like Bitcoin is like accelerated business cycles because of not only, it's not really even the halving, it's just that the fervor and animal spirits come in and there's no bailout. So you get to see in real time what are the right and wrong ways. And I think a lot of the quote unquote gold bugs, I wouldn't consider you that, but the folks that have understood you don't want like GLD. You can't take delivery. It's full of counterparty risk. And so people have been stacking. But that's been a smaller percentage. And those individuals have understood what's best in class. And now the rest of the market is naturally going to have to figure that out because that's going to become like a core part of their portfolio. At least that's part of our, like my personal thesis. And I think where you sit and what ties that all together is the notion, and it's still, you joked about Magic the Gathering. You could kind of say that's what's kept a lot of people out because a lot of Bitcoin people still act like, Magic the Gathering collectors in the sense that like a couple of years ago, it was 250K Bitcoin had to get to hit parity with gold. Now and then it was 500K previously, and now it's a little bit higher. But point being is like gold's not a magnet, and then Bitcoin just hits and then like surpasses. Gold is foundational money for trade and has been for thousands of years, and it's kind of like nonsensical to think it would just go away. And I think a lot of the individuals in the Bitcoin community believe that. And I slowly started coming to this realization from a different angle, which was just volatility in old people. They can't just ape into BTC and watch their portfolio go down 75%. And I started like pulling at that thread and realizing that this is just going to be tied together for a while. So all of that just tying into excited for this conversation because I think you, other folks like Dan Tapiera that came from the gold space, and then we've had Tad Smith on as well. And Tad's interesting because similarly, he just looked at the world from a scarcity perspective. He was the CEO of Sotheby's, and that was his notion of understanding Bitcoin. It's like if there's only 21 million and people are subscribing some value to it, let me just underwrite where there has to be some kind of value to it. It sounds like that's how you first came in as well.
100%. And, and I kind of look at it like, what is obviously Bitcoin is getting its economic energy because people want to buy it. And I think, early on, I think it's the thesis of why buy Bitcoin has changed a number of times, which can be concerning. But what continues to happen is people are buying it for different reasons. And now, in 25, we're seeing, people are moving corporate balance sheets and they're adding Bitcoin to it. And I think it's not just MicroStrategy. There's others, jumping into the mix. So when you look at gold, a lot of people think it's like not even used, and we're not on a gold standard. And we're actually in a just over 50 years experiment of not being pegged with gold for the U.S. government. And you were not even allowed to own gold outside of jewelry. So you weren't allowed to own bullion, pre Nixon. So Nixon cut it. So it was early 70s. So we're kind of in an experimental phase. But if you look at who is buying gold, and this is where there was a lot of people that bought gold during COVID, obviously. But I would say like the last 24 months has not been consumers. It has been the central banks. And so those are the groups that we are not allowed to know who are the owners of them. I think some of us probably could guess some of the names behind them, but we don't know their full ownership structure, which is kind of interesting actually. So if you look at AML, anti-money laundering, know your customer, what that banks have to do, the own U.S. government, and anytime a senator or a congressman asks to audit the Federal Reserve, they're shut down. And so it's kind of interesting how, rules for me, but not for thee. So, or vice versa. So yeah, it's an interesting metric. So they are continually buying physical gold and put it on their balance sheets. So this has been the trend that really, I think it really got kicked off and I think it was probably an error, when the United States and the West seized physical assets from Russia and kicked them out of the SWIFT system. And so what we saw is even Europeans did that, to Russia. And obviously there's understandable reasons, but when someone can have basically a blacklist function on their money supply, they're going to start looking for alternatives. And I think those that were watching, China in particular, said, hey, if that can happen to Russia, could that happen to us? And so now you're seeing, just last week, the BRICS nations, they're all meeting and they're putting together a whole new financial system. Trump comes in even before he took office. I think it was right around Christmas time. He posts on X, a warning shot to BRICS. Don't create a new currency and don't back it. He said back it. And a lot of people didn't even think about what is he talking about. He's talking about gold. So then suddenly he comes into office and then insane amount of gold starts getting imported into the United States. So, and I've been talking on my X, started talking last week that the mineral war is on. Like it is definitely on. And so, Africa has pretty much been gobbled up by China. They're grabbing, and a lot of people don't know, there are rare earth primary deposits out there, but there's very few. But a lot of gold mines, copper mines, they also produce byproducts that could be a rare earth or all a strategic mineral. And so China has been sucking up a lot of resources that are needed. And I'm going to dovetail this into how it goes into Bitcoin and eventually energy and AI. Minerals are at the forefront, and I think we could all agree. Whoever's mining Bitcoin controls the future. If you can't run servers, and if you don't have the energy to power all this infrastructure, you're going to lose militarily. You can't control AI. This is why coal power plants aren't being turned off anymore. Now they're like, let's extend the lives. And then now suddenly, nuclear is being adopted again. And so, yeah, there's a major race. So you just look at strategic assets. We need water. Water is not going to go away. We need food. So you start looking at all these critical assets and to why. And so if we find something that replaces food or water, right, that scarcity supply demand curve changes. So this is what makes gold a big driver. Central banks decided to dump it. Yeah, gold price is going to go way down, and then it's going to turn into, is it just a pretty thing? We're seeing that in diamonds. Diamonds have not done well in the last couple of years. And why? Because it's the real diamond, while it might be somewhat scarce, it's a false supply, but now they've got, the lab grown, which you can't really even tell the difference to the naked eye. And so now, like the De Beers of the world, who kind of had, called the control, the diamond world is slipping, and then less people are getting married and spending the same, back in the day, what was it? 3 months salary is what you had to buy for your fiance or whatever it was. That world isn't really there. So we're starting to see that price is, waned compared to other things. So yeah, these are interesting times. So I think when you think about investing in something, you don't invest in something for where it is today. It's where is it going? And so is it going to be adopted more or less in the future? And so when I got into precious metals, I was already investing in mining companies. So I bought my first mining company. It was a copper mining company when copper was 50 cents a pound. Well, now it's $5.50 a pound. So same concept with Bitcoin. In the future, it's going to be really hard to own one. It's getting harder today than it was a few years ago. So if more and more people are going to want to, clamor and own, a resource that is limited in supply, it's a nice thing to own, and it's definitely a nice thing to own. So I think as we kind of look around the world, countries distrust each other more than ever. Citizens distrust the institution and their politicians more than ever. I think maybe a good portion of the United States had maybe more trust in the political system, and just we've seen with some of the, I'd say, disappointment around a certain case. Did someone die or not, and why, and all this stuff. I think people are going, wait a minute. And then, Elon came in, right? He's saying, we're going to cut, save, do all this. And then suddenly, big swing over the last, number of weeks where we can't cut our way out of it. So we're going to spend our way into it, because that's not really an exit either. So suddenly this is where, Bitcoin we're at all-time highs here, and gold has surged this year. Silver's now moving up nicely. Even some of the alts in the blockchain space is starting to move, because people are, I think, sensing the world of liquidity, the faucet's about to be turned on. So this is, yep. I think, a very interesting convergence into things. So yeah, there's not many people in it. There's not many that do what my company does. And now tariffs are also here. So there's not many mints, not many manufacturers of gold and silver products in the U.S. And so some of that stuff is being tariffed, even though there was an exemption. But certain fabricated products are being hit. So we've been hiring the last 2 months, just to handle the inbound, for contract manufacturing, for banks, for foreign governments, and for a lot of things that's going on. I think you're going to see, there's no doubt within the Bitcoin space. I'm seeing there's funds out there. They're raising capital. They're deploying it into, companies investing within this sector. I think it's an interesting time where I don't think our government is going to, or governments, plural, any government's going to get out of this without being incredibly bumped and bruised. And consumers, we have to take things into our own decision making for our future. So whether you're 20 or you're 60, or anywhere in between or beyond, you are thinking about, what is this world going to look like? Can I afford it? Nothing really makes sense today. I mean, even the stock market, that was kind of my generation. I'm in my mid 40s now. You just buy the stocks. Well, back a number of years ago, it was based on, there was, how do you value something, price to earnings ratios and different, all that stuff nothing makes sense anymore. So, and now, most of the stock market is driven by like a select handful of companies like NVIDIA, for example. So yeah, it's an interesting time, interesting convergence. There's a lot of unknowns, but man, is it also a time for those that are grasping it, not listening to the mainstream. They're grasping it and doing things on their own. It's also a huge opportunity to not only survive whatever mess we're heading into, but actually thrive.
Agreed, Josh. You made a lot of great points throughout the past couple of minutes here. One thing I did want to just dig into a little bit deeper is this concept of a revaluation that's underway, right? I think somewhere you had written about the rally in gold is not a hedge, it's a revaluation. And I want to tie this into a couple of the themes that you just mentioned, because as you know, we operate in the Bitcoin space and we have a lot of connections in the policy side. So we've spoken with policy groups and state legislators, and even just with the Genius Bill today, right? And so there's a lot of momentum, and I think there's DC and then also states are starting to wake up to the fact that the US has a strategic advantage as it relates to Bitcoin relative to other countries, and particularly adversarial countries. And one of the interesting stats behind that is about 40% of the Bitcoin wealth sits within the United States, and then a lot of the companies that operate in the Bitcoin space sit within the US as well. And I would love to get your thoughts on that, but then also just given your background for the past 20 years in precious metals, how do you think about the strategic advantage or lack of advantage that the United States might have relative to China or Russia as it relates to gold, right? Like, does the US have a strategic advantage there, or are these adversarial nations better suited for a world where gold continues to be revalued higher?
Yeah, so obviously we don't know exactly how much gold is in Fort Knox or not. Elon was talking about it, even Trump, and we don't know. I have my theories. It's quite possible some of it may have been missing, lent out, sold. My thinking is, if you're going to bring up a problem to the public that no one's talking about, you probably have already fixed it. That's me. But if we look back at the Bretton Woods, when the world kind of went, and created the World Bank, the IFC, the world of finance, the United States hold, I think at the time, 2/3 of the world's gold. So that is not the same today. I don't think they have 2/3, but I believe they're, depending on what report you're looking at, stated they're still the largest. Now, China, and again, I'm going to go with that. We know China has been a huge vacuum machine of sucking physical gold all around the world to their shores since then. I think that's why you're seeing Trump kind of push the U.S. forward. It really comes down to trade routes. People say, a lot of times, people, when they say, the United States is not the policeman of the world, but I don't think people understand what that means. Yes, there's problems, but part of the agreements after World War II is that the U.S. would allow trade in the world. Why is piracy and why do most ships are able to sail free? Well, that's, the U.S.'s Navy plays a gigantic role in that. While there is problems out there, for the most part, the last number of years, trade exists. We're entering a world of, I would say, we're being bifurcated. So Axis and Allies is being created. You're either going to be Team USA or you're not. And you're seeing those alignments arranged. There's a lot of, there's the BRICS organization. There's some that, like India is one of those that's very aligned with the US. They also kind of fight China at the border. What side are they going to choose? So, at this point, it's not a kinetic scenario, but we've been in a trade war, and that's what tariffs are all about. We're upsetting the system. And so when you look at gold, you say, well, who has the resources in ground and who can protect it? So we were just talking, I think, offline or before we got on, in the news, Barrick, which is one of the largest gold companies in the world, just had their resource pillaged. They had helicopters land. The Mali government landed and took 117 million in physical gold from them. Well, they're Canadian. I tweeted out on X, if that was a U.S. company, I don't know if this would have happened. And so this is a different way of thinking because there's repercussions. Like if you kidnap an American, that's why American passports are more important than another passport somewhere, because we're treated differently by other governments. They take our nation a little more seriously. Now, I'm not saying bad guys are going to do bad things, but there's different repercussions. And so because of the U.S. military presence, Canada doesn't have a military, doing anything like that. So I made also a prediction that Barrick's probably going to move their headquarters to the United States. Why would you domicile in Canada? And so I just saw the news like a day later, they're looking at selling their last Canadian asset. So could this be the start of it? So I'll make a prediction. They're going to buy a U.S. company. They'll switch their headquarters to the U.S. And Trump is their administration has to already be in conversation with. So, resources are, but what I was getting at earlier too, when you're pulling gold out of the ground, there's a lot of byproduct of metal. When you're pulling out copper, there's a lot of byproduct. There's a lot of critical minerals. Like we always hear about rare earth minerals, but a lot of times it's just small stuff that there's no primary mine for. And so while China captures it, there is a big issue. And I think regulation has been hurting the U.S.'s resources. And so some of you on the digital side, under Biden, the U.S. regulatory environment for blockchain assets was terrible, right? It was terrible. If you're a bad actor, you went to another country and you did it over there. In the resource space, it's the same way. So let's say a lot of Latin America, a lot of Africa, U.S. companies and European companies can't directly touch those mines. So typically it's the bad guys, it's the cartels, it's the criminals. And a lot of that material ends up either in China or Dubai, and then it makes its way to Switzerland. So who is sucking all that material out? And there is definitely a need for reform within the banking sector as relates to precious metals. So the gold and silver industry is regulated very similar to banks. So it's a tough, compliance regulatory. We're seeing this with digital assets that's been treated at times terribly. Obviously much better now with a new SEC chair. But and Trump's administration knew that, hey, if we want to be in the future, we have to make it easier. So I think you'll see a new mining bill out later this year in 25 to make resources flow better back to the United States, to be held here, vaulted here, used for defense, used for technology. If we don't have, I think if Elon was on with us right now, he doesn't like to talk about silver because he needs so much of it for everything he does. There are strategic assets that the United States has to have if it wants to propel itself into the future. So AI chips, all this stuff needs all these very expensive materials. If we want to launch into the hydrogen economy, you need iridium, you need ruthenium. Where is that? South Africa. Well, the United States probably wants South Africa to align itself with the United States as opposed to aligning it to the other side. So it's going to be an interesting number of years here. And, I'd say the U.S. seems like they were asleep at the wheel for maybe decades when China was going around cutting deals. They were doing airports, schools, building infrastructure all over Latin America, the Caribbean. and South America and different places. And so they were getting, sweetheart deals. And while the United States is not perfect, I think you can look at how, maybe some of these other entities like China treats these other countries that may not be the most ethical either. So I do think the United States is working hard under this new administration to mend old ties. We saw this with Panama. Sometimes you have to use a little bit more than just talk. It may have been like, literally, the military will be invading you tomorrow if you don't do this now. And so I think when Cruz went down there, Panama said, it's done. We're aligning ourselves. So I think Western Hemisphere is critical. So hemispheres are critical. So where all this ties in, if the U.S. can lock down, this is why they're talking about Greenland. Can Canada become a state? It's a lot of it has to do with resources. And so if the United States, we may lose Taiwan at some point. You're going to lose probably a good chunk of Africa. It's North and South America is probably the critical component. Europe's kind of not as important anymore, to be frank. They're kind of very dovish. They don't even know how to take care of their own citizens. They don't know what they want to do with their future. They're turning on, Germany turned off all its nuclear power plants, lost all their industry, and now they've got huge problems. Meanwhile, France is pretty happy because they have their nuclear power. Poland is about to become the largest economy. Poland's more aligned with the United States. So this is definitely interesting, and where all this ties into, if we think about it too, is like if we look at stablecoins. The one stable coin that's kind of being kicked out of certain Western is which one? Which one have you seen kicked off exchanges the most?
Tether.
Yeah. So this isn't talked about much. So then what's the one that's being promoted the most in the US? Circle.
USDC, yeah.
So if we start thinking about who do you think has the most Tether and who do you think has the most Circle, if we think politically, it's China. It's China on one side, U.S. on the other. So this is part of this whole bifurcation of the world. The bifurcation of the world, like what are you on, to where Tether's being cut out of the system, and so this is we're leaving globalism and we're going into a much different environment, and I don't think people understand that fully at a macro level. Like why tariffs? My take on tariffs is Trump is also trying to get U.S. companies to get with the program, and so sometimes he can't tell people exactly what's going to happen. But imagine if we can't trade with China at all at some point. So bring that infrastructure back to the U.S.
Yeah, bring your resources. Real quick, just to double click on the Tether, I think there's two components. One is, I think at an overarching macro level, there's just an arbitrage from free money or dollars into hard assets, right? And that's the game. I think it's been the game for a long time, but specifically the past 5 years, whether it's land, anything to do with land, whether it's energy or resources, gold, BTC, specifically. And Tether, you can kind of look at them as almost like the canary in the coal mine, because what do they hold? I think a lot of people don't recognize that they have their treasury of Bitcoin. I think it's like 50 to 100,000 BTC, but they actually have 50 tons of gold, and they're buying up not only land and acreage, but also like data centers. And so to go a little further, you said before the chat, you had some thoughts on the Genius bill that just passed. How do you see that playing? Because there's an interesting dynamic with Tether, because what you said, there is an antagonistic version, but they're also getting really close with the administration. Lutnick, they got a couple SPACs now going to be, funneling those dollars into the equity market. So how do you see that dynamic playing? Because it's almost two sides, like antagonistic, but also they're trying to get their seat entrenched in the U.S. financial markets.
Yeah. While I am Team America, I think all of us could say, do we trust everything that every government bill does? And to me, if we go back in time, if you look at how they name the bills, the Patriot Act, Inflation Reduction Act, it's like sometimes it's the direct opposite of actually what's happening. And so when you tell me this is genius, and there's some great things in there, don't get me wrong, and I think it's going to pump some bags in there, but it also is going to benefit the old school banks, of which the whole thesis around blockchain, crypto, Bitcoin, the whole thesis is what?
Disintermediation.
Is getting away. Yeah, taking out the minimum between you and your money. And so while they're saying it's anti-central bank digital currency, these are also currencies that have blacklist functions. And I don't know if people understand what this means. Do you have a blacklist function on a $20 bill in your wallet? Nope. Do you have it on a gold bar? Nope. Well, digital assets now, they're all going to have blacklist functions. So which means they can be seized. You can't. So every stable coin, this is kind of the back door for, I would call, institutional control, and then and then allow the old school banks that are so far behind, guys. Like, why shouldn't Kraken benefit the most? I mean, Jesse Powell was the OG. He even tells people, don't even keep coins that you own on my exchange. Keep them self custody. And then now we're hearing, put your, keep it inside exchanges, for the other guys.
That makes sense, but that makes sense. But curious, how do you reconcile that because you can put like a blacklist on Bitcoin, but you can't stop somebody from sending it or accepting it. How do you reconcile the stable versus with the Bitcoin custody, like the interplay?
So, stable coins is the future because people need a place to park capital. So until Bitcoin doesn't move, it has volatility risk. Now, I think long term, that volatility is going to go down. We've already seen it. And it's also nice when it's volatile to the upside. Wonderful problem. But the reason that stablecoins exist, in particular, let's say on the ETH side, is people need, as they're trading, as they're buying, and they're accepting payment. How does a shop accept payment in something that could drop 10, 20% by the time they get to the office the next morning? It's difficult. So that's where stablecoins kind of come in on the currency, the money side of things. And so people need a place to park it. All that stuff is going to have blacklist functions. So to your point, yeah, maybe not Bitcoin, but then they're monitoring the on and the off ramps. So so I also look at it from the construct of the stock market. Can I send you a share of Apple? Nope. I have to go through a brokerage firm. It's like, and then you start looking at retirement accounts. It's essentially now it's not Ponzi, like multi-level marketing, but if you really look at the definition, you blow it up and you go, yeah, if more people don't put money in and keep it in, then the other guy can't take it out. So, if we look at the whole infrastructure of IRAs, 401ks, it's all about taking that next generation's money and putting it in. And putting it in and putting it in and putting it in. And hopefully, it pumps bags and people are able to sell out.
Yep.
So I don't think they really like Bitcoin the way it was, say, a number of years ago, because you could go send in $100,000 to Coinbase or Kraken, make your transaction and send it out in minutes, right? Gone outside the system. So I think what they're trying to do is figure out how do we brick this capital so it can't leave. We can control it.
I.e. ETFs and public treasury companies. I know Jackson's a place we want to go, but I want to call out one thing just to say is because you're a study of like monetary history, so I'm sure you know this or read the book, The Secrets of the Federal Reserve, and you look at the 1913 Act, and it was literally the exact same. Like, they were the same bills, because I'm going down this like rabbit hole looking at the Great Depression. They're the same bill, but they were just worded different, and they push people in a certain direction. So after reading that, it's like I don't trust anything that's like put in front of us. But
so the reason I moved my company from Arizona to Wyoming was there was a number of reasons. A lot of prayer, looking for somewhere that's going to treat me well. But a big component was a foreign trade zone in the event that Smoot-Hawley Act comes back. So this was 4.5 years ago. Most people didn't know how to spell tariff correctly. So here we are. To your point, history doesn't repeat itself always, but it sure does, sometimes look very similar. So here we are with tariffs back on the table for the first time in modern history for the U.S. And yeah, we're seeing the same type of construct. So the monetary system's broken. We don't know exactly what it's going to look like on the other side. This is the World Economic Forum. Guys, you will own nothing and you will be happy. We'll be on subscriptions and, in the metaverse. And
Jackson's a fellow. Jackson's a WEF fellow, so just be. I'm just
yeah.
messing around.
Well, hey, maybe that's going to be great. But a lot of us probably would say, yeah, maybe not so much. So, I own metaverse real estate, but I also own physical real estate. I own physical gold. I'm not a maxi, but I'm a primary Bitcoin. But I have a few other technologies that I like. I've got NFTs. So I've, been in, again, physical art. I've got digital art. So, and some went to nothing. Some have done amazing. So I've even had, Bored Apes. I've got Pudgy Penguins, and people kind of laugh at it, but I could liquidate it and I'm pretty happy with it. But you know what? What I want to be a part of is I want to be part of that digital revolution. I want to understand. I want to win, lose, bump my head, have something work really great, because if my company, especially if as a gold guy, if I'm going to talk to an artist that wants to put something onto the blockchain or work with someone else, you have to understand at least some of it. And there's a lot more I need to learn about, but you have to experience it. So as real world assets do get onto the blockchain and people want to, like right now I mentioned iridium. That's probably a very interesting metal that most people don't know about. That's going to be part of the hydrogen economy. Well, how do you invest in it? You really can't. Well, imagine if something was tokenized, right? But someone's going to have to be the custodian. Someone has to audit it. And so that's where our vault stands in. So I'm essentially blockchain agnostic when it comes to third party storage. But my fund, going back to it, as we raise capital, we're about to announce a second offering. I think it'll be a $100 million raise that we're going to announce here in a few weeks. We can hold up to 10% in Bitcoin. So we hold, our balance sheets consist of 90% physical metal and up to 10, and that's to keep our opportunity zone compliant. So that is what a pure asset, like to own with tax benefits. So we're in the space. We're in the space, and you want to own things that are rare and that people are going to want in the future.
Totally agree. And Josh, I want to make sure we do have time to cover more specifically around the idea of like what you're doing with the Wyoming Reserve and physical vaults, and why investors from the sovereign level to the consumer need to think about that. I do want to touch on something though before we get there that will hopefully paint the picture, because you had mentioned the idea about how the monetary system is deeply broken. I think that's something that both people in precious metals and in the Bitcoin space will almost always agree on, right? And one of the things that we're paying attention to is that there's about $12 trillion of federal debt that needs to be refinanced. Interest payments on the debt, as greater than defense spending. It's over $1 trillion annually. Debt ceiling raised for the 79th time since 1960. So the Uniparty is just continuing to kick the can down the road. And I'm just curious, looking through the end of this year and into next, how you think about gold revaluation. Treasury Secretary Bessent has talked about the, and I think you mentioned it as well, just having to grow out of this debt problem, and we'll see how that goes, right? But then he's also mentioned Bretton Woods and a reordering of the monetary system. So I'm just curious, like, before we get into why physical ownership is important, because that's a good topic for us to discuss, I just want to better understand, at least myself, and I think the listeners will appreciate where you're coming from as it relates to just gold's role as a sovereign asset, a tier one asset on these balance sheets. Like, what is that going to look like in the next year?
Sure. Yeah. In one sense, people say gold is a fuddy-duddy, it's an old asset, but that's also what is so nice about it. It's proven, it's tested. So it's been around for, thousands of years. It has it's been the asset that settles war debt. It's an asset that right now is still being pledged and purchased at different banks as escrow, in my opinion, for future war financing. Number one buyer of gold last year was Poland. And a third of it's at the U.S. Fed. Why is it not all in their country? Like, if you look at history, it's, for those that are watching have ever watched Game of Thrones, the kings and queens, they're all battling, but where do they have to go to get their financing? the Iron Bank. And it's a really good analogy when they walk into the room and they finance both sides of the war, and the winner has to pay the debts of the loser. So that physical gold's not going away. The fact that like not a lot of people promote gold, like on TV, they'll talk about it real quick and it just kind of scurries away. Maybe they have a mining company exec on. Like BlackRock represents, gigantic central banks. So do every major bank has a bullion division. JP Morgan is one of the biggest players in the world. They're not out there saying buy gold. They're not. I don't think they want competition. This is an asset class that's not supposed to be for people, if you kind of think of it that way. And in fact, you were not allowed to own it for the majority of the the last century. So it's interesting to think like that. That's an asset that they want to control, and it will be used in it. And so going back to my, you have to have a military, you have to have water, you have to have food. Gold is not going to go away. It's just it's part of it, even though everyone has said it's demise. But now, gold, if we kind of look back since 9/11, it's kind of trading it's doing better than almost everything outside of Bitcoin. So if we compare it to, I realize you can pick highs, but 90+% of the blockchain space is garbage, right? It's done nothing. Went way up and went way back down. Gold was like in the low 200s, just over 20 years ago. And now it's 3,300. That's a pretty good return for a boring, low risk asset. And so I think you're also seeing US states, they're passing new regulation. But really, if people are paying attention, I know you guys are, states are looking to hold Bitcoin on their balance sheets. They're also looking to hold gold. So the state of Utah, the state of Wyoming just announced they're going to be adding gold. And you start looking at, and I don't have Utah's numbers in front of me. The state of Wyoming has, I know in one of their funds, they have got $30 billion in a trust. And they run that like a sovereign wealth fund, and then they take those gains and manage their budget. And so when they say, "Hey, we're interested in buying gold," that's interesting. A little disclaimer: my vault is listed. We're publicly listed as a finalist with JP Morgan to hold the state's assets. Should know more later this summer, but I think states are looking, saying, "Hey, I can't control the U.S. dollar, but we're all having problems. Not every problem, but the majority of problems right now are all based on the inflation. They printed so much stinking money during, especially during COVID, and I think it was when you start thinking about inflation is a policy, and we can't control it. It doesn't matter what politicians in. We just spend. And so I do think states are looking at least at a local level and saying, I can't control the money directly, but maybe we can invest in different assets. So you're going to see a movement of states to put together gold. More gold is going to be purchased and held on the balance sheet. That is something that's going to grow.
Quick heads up for Scarce Assets listeners, we're launching Onramp IRA later this week. It's the first and only Bitcoin IRA built on multi-institution custody. That means there's no single point of failure, not one entity holding your Bitcoin, and no need to manage keys yourself. Historically, the options were either self-custody, which could be risky over several decades for retirement, or a single custodian with unknown exposure and lack of transparency into how the asset's held. We've built something better, a retirement-grade solution designed for longevity, security, and peace of mind. If you want to be among the first to learn more, head to onrampbitcoin.com/research and sign up for our newsletter. We'll be sharing the full details later this week. Hope you enjoy the rest of this episode.
Yeah, that just actually, I hadn't looked deeply into it, but I pulled it up while you were chatting about Texas brings back sound money. It was effectively, I didn't realize like the implementation was you can house the gold, I think, at the sovereign depository there in Texas, and then ultimately like get issued a card to spend it. Now, I don't know how much traction that'll get. But there's been, to your point, a lot of demand and interest from sound money across the board. I think there's what I'm curious, and it kind of ties to what Jackson was referencing about what you specifically do on the vaulting side, is this notion of like repricing, revaluation that I don't want to call it a lie, but I guess it kind of has been a lie that people's wealth has been put into. You mentioned multiples in the equity markets and how they're defined, the equity markets. Like that's a false construct. When people say money's a false construct, I don't think that's necessarily true. I think there's certain attributes or properties to make a good form of money, and gold had it for thousands or has it. And then Bitcoin mirrors it when it comes to portability, finance, scarcity. And, but we moved away from that for a number of reasons. And I think that the market moves with the sovereigns, right? They move with the powers that be, and the powers that be that have ultimately started to reprice gold, and the rest of the market will be catching up. But where I still don't know where that goes is how that integrates in a way with TradFi and your traditional bank account, right? Because you can kind of glimpse into that maybe with Bitcoin and being able to buy spot through your bank eventually, and then you can transfer between stables and BTC. But I think very similar is gold's going to play a role in that, because it's, again, a little crazy to believe the 75-year-old or even 55-year-old is just going to say, oh, now gold's my savings account. I'm going to liquidate my, a large percentage of my portfolio from bonds or stocks to go into BTC for all the reasons you referenced with gold's track record. And so just curious, like how you think about that, and then how your business, but also other businesses like that, are going to build best in class products, because that's what I think what we do at Onramp right now. Like Coinbase isn't best in class if you're thinking about counterparty risk and ultimately have a long time horizon. No single custodian has lasted over, like, call it 10 years in the Bitcoin space. And there's a reason for that. And similar with ETFs, we know you can't redeem them. And so the market's still so early. They're okay with an omnibus pooled wallet with all this BTC, but we understand if you've been in the space, that's not really how you want to manage if you have material wealth. And I think that's similar to gold. Some people play around with some GLD, but if you're going to have a material cornerstone of your wealth, you want it in a secure way. I'd love to hear not only what you do, but then how you think that's going to play out. Because I think we agree that's where the market goes, but there's a lot of education from going into overinflated 50x, revenue multiple of whatever stock you want to pick versus holding sound money.
Yeah, I'm not one to think that we're going to be using gold bars and coins at the grocery store. So I don't. I think it's I look at more of as an underpinning of an economy, as a faith. Think of it as it is trusted in an economy is what. And if we go back to talking about J.P. Morgan here, if we go back to the history, before the Federal Reserve was founded, we had a lot of gold in the United States. And then there was a huge concern that the U.S. was going to default. So right around 1900-ish, right around in there, a lot of the gold, the Europeans were taking their gold back. And there was a huge concern of default. Well, JP went over and convinced them to bring their gold back, which and underpinned it. And the U.S. did not default. At that time, if you look at the 1900, I forget the two people, the running candidates on the Democratic Party and the Republican Party. The Democrats were holding up signs. If you look at you get video footage, and they're holding up signs saying silver, silver, silver. They wanted more silver into the economy for the people. The Republicans were saying gold, gold, gold. They wanted more gold. It's more, more at the banker level. And that was the biggest problems of the time. So, and then obviously the Federal Reserve was created not too far from there. So if we fast forward, there is a need for, I would say, it's a physical asset. One of the downsides to gold is it's expensive. It can be stolen. Is it there? And so one of the themes I've been talking about this year is jurisdiction matters. Where do you own it? So most of the world's gold traditionally has been held at the Bank of England in London, all in one place. So you're seeing nations are asking for its gold to come back. And so they're repatriating gold everywhere. Venezuela asked a number of years ago, asked for their gold, and they said, nope, you're not getting your gold. So that's in the world courts. So now you can see where people do want their assets, back home. But then we start looking at the vaults in the United States. They're out of insurance. So it's a little secret that no one wants to know. So a typical facility is going to cap out around 5 to 6 billion in coverage. There are vaults out there, guys, that have 50 to 100 plus billion in one location, which means there's not dollar for dollar insurance. Most people will get an insurance certificate that says I have it, but in the event of a total loss, there's a problem out there. So there's a need for what I would say world-class institutional vaults. So that's where, when I built this facility out, and we still have more construction to go, is having private vaults that have extreme transparency, third-party audits. It can be visited. We've got metal detection and X-ray and armed guards, and we have all the stuff that's even my ceiling. Everything is concrete. It's and you do that for insurance. You do that for purposes. So there's going to be a big push for geographic spreading of the material out there, just like you're seeing. Even your password for your wallet, multi-sig. Don't have them all in one location. Obviously, you guys are in the custodial places. Don't have, you shouldn't keep your coins on an exchange. You're exposed to their balance sheets or whatever. FTX shared a lot of that issue with us, and so I see it. I see gold as kind of the underpinning of people's operations, the government's balance sheets, and then we're going to see Bitcoin is clearly playing a role, and it's growing. It's what Bitcoin's over 2 trillion now, so it's going to continue to grow as another asset that's playing a kind of a similar role. So I think it all dovetails. So instead of taking Peter Schiff where I'm going to bash it, I made the choice years ago to saying, hey, you know what? I like it. It has the same thesis. I can own more than one asset. I don't have to be a maximalist on something. I can still be very passionate about one or the other. And at times on certain snapshots, maybe you're proven right. But we also don't have a prediction ball of what it's going to look like in the future. And while but you want to have exposure to the things that could potentially be really, really strong.
Sorry, just to jump in, it's so fascinating because there's two aspects. Everything you reference about jurisdictional custody insurance, they're like mirror BTC,
Yep.
right? Like there's not enough insurance on any custodial exchange because they hold, 100, anywhere between 20 to 100 billion, and Lloyd's is only going to insure up to like 250 to 500 at max. Or jurisdictional stuff matters, right? If somebody's going to seize, and that's where like El Salvador put their allocation, brought it back home. And then the point of underpinnings is still, it's a little bit easier, or it is easier to move, but it still has the friction point of how do you actually like create financial infrastructure. The other thing that, but tying into that you said was about, so what was the second part? You were referencing there's the jurisdictional the diversification. So you were referencing not being a maximalist. And that's actually the rational thing to do. And it's an irrational. So this ties back to security. And we'll put in the show notes, but it came up, I think 2 nights ago. Josh had tweeted about the country, I guess, of Mali, never heard of it, but they had like literally took a helicopter in Africa and airlifted 32,000 ounces. I think it was a ton of gold. And this was $100 million. And I think this is something that we just fully don't appreciate for Bitcoin holders in self-custody, is that people don't recognize that people hold tens of millions of dollars or hundreds of millions of dollars in their homes. And when they do, if they're willing to take an helicopter to take, something that's very heavy, like this is the kind of our theme with the counterparty risk, but taking it a step further is, it makes complete sense. We see this with very sophisticated, and you work with them, where somebody gets overexposed because of the price appreciation or whatever reason into gold, and they naturally will diversify into BTC because of its properties. In the same way, OG holders that have held thousands of BTC will naturally diversify into gold because you don't want to get knocked out of the game. And that's just pragmatism. That's not like ideology. So it makes complete sense to have a portfolio, especially as you get older. You can't you're not going to go to the bread lines if you lose all your gold. You want, God forbid something happens, you still have your Bitcoin.
I am friends with some of OG Bitcoin, day one, Genesis, ETH guys. Even though a lot of these people will say they're all, a lot of people don't talk what actually they're doing. But that's to your point. You always take something off the shelf and and diversify a little bit. And that could be both ways. And that is critical. And that jurisdictional risk, I think you saw Kraken was in the news. They moved their headquarters to Wyoming. Wyoming has some of the best regulatory environment of digital rights in the world. And you're going to see there's going to be an announcement of someone gigantic. So Wyoming is going to be I can say this confidently, it will be the blockchain capital of the United States. And I think the amount of energy and capital that's coming in here, the protection against, bankruptcy liens for custodials is there's so much legal framework of why you're going to see more businesses come to Wyoming. That was one of the other reasons I chose here to say, hey, I'm a classic asset guy, but I want to work with these other groups and just be in a place where property rights. This is like Wyoming's old school. It's like going back in time, and it just doesn't want a lot of people here. So they actually created the LLC. Delaware did a much better job marketing it, but they copied Wyoming. And I think, you saw, like Lummis, you've seen Caitlin Long here. You've seen, there's been a number of lawyers that are here that have really kind of pushed forward to say, you know what, we have to protect digital assets like physical property is also protected in the state of Wyoming. And there was a very prominent property rights case a long time ago that went to the Supreme Court, and it talked about that if you're not allowed to build a fence around your property to keep out trespassers, then you do not have property rights. And so they've taken that same exact construct and said the same thing to digital assets. And so it has fencing. And so think even like something as simple as if you own a token on an exchange and you get an airdrop, and if you're a resident of some states, you don't have a claim to get it. And if you're a resident of Wyoming, by law, they have to give that airdrop to you. So these are the things that, we're just facing the unknown. But where you are does matter. And I think we're going to see that for a lot of reasons. U.S. has a lot of problems, but it's still the best country in the world, and in my opinion. And so while I looked at other places around the world I said, you know what, I'm not giving up on the U.S. It's going to be a rocky road ahead. But this is a great place to build, and it's fun. It's fun to watch other people build as well, and just watch it grow. I mean, who would have thought? I remember when Bitcoin hit 10,000 the first time. Now we're six figures, right? We're probably gonna have that same look back, perhaps with another digit at some point. So, these are interesting times to watch, and frankly, the same thing on gold. People don't really understand. There's ratios of debt to how much gold is out there. It's my conservative approach is it'll be 10,000 this decade. That's what I'll say on camera. My off camera is much different. So
Yeah, I fully believe it. I mean, I think I'm not sure where you want to take the rest of the show, Jackson, but I do want to call out all of this. The overarching theme is there's going to be like we're in a bull market for counterparty risk, and you referenced it earlier as distrust because there's just too much debt and not enough whatever you want to call the scarce asset. There's not enough dollars to service it. There's not enough gold. There's not enough Bitcoin. So at the end of the day, if you look at it from that lens, wherever the underlying sits is 10/10 of the law. And so you want to make sure that you have eyes and you have it in the right place. And how you feel about Wyoming is how I feel about Texas. And we've adopted a lot of the stuff that Wyoming initially, the specie law around OCC and the underlying collateral to be used for loans. And Texas has picked up on a lot of that. And I think that's the beauty, as you're referencing, of the U.S. is there's a friendly cooperation and competition because you can naturally see that proliferate in the States. And then that's where people's capital and you move with your feet and intellectual capital. And then that's how you can start to create different frameworks versus you have to leave the country.
I think historically, Wyoming and Texas have been it's big brother, little brother. In the energy sector, oil, gas, uranium is gigantic in Wyoming, food, meat, beef, rare earth minerals, coal, it's the biggest coal state. So it's the second largest energy exporter behind Texas. And so I'm not just predicting, I know that the two states there's synergies happening and they're in the works. Both on the physical metal side, but also on the digital side, because there's states that are leaders, and then there's states that are followers, or they're just gonna fall apart. I think we're seeing the state. Businesses are leaving certain states, And yeah, I think this is going to be an interesting time, as we go forward, to say, it's a good opportunity for the states, and it's also attracting the talent. Is the talent there? Obviously, Texas just pulled in, Elon. There's just huge things happening, and you're seeing it in Florida too. So there's a lot of exciting things, I think, within a few different communities that, from talent to regulation, and also just a will to say we want this type of business, we want this type of thing. Wyoming's doing a stable coin later this year, so they'll be the first state to issue a stable coin. And so, and people kind of go, well, why? And I can tell you why. There's a distrust of the other products that are out there. And so if residents of whatever community need options. And so that'll be interesting as we go forward.
Totally agree. Josh, I know we just have a couple more minutes here. We got to jump to another call, but I did want to just get your thoughts really quickly on institutional investor interest. So from what I've gathered on this call so far, it's almost a barbell in terms of you have at the highest level sovereign central banks that are doing business with you, understand counterparty risk, want physical metals in their jurisdictions or want to store it in Wyoming for the reasons you described. And then you have, I would assume, like kind of high net worth, ultra high net worth individuals. But you also made a point earlier that I thought was interesting because I saw this when I worked in the traditional finance space, is that wealth management, family offices, institutional investors have largely ignored gold. It was never really like a core portion of portfolio allocation. It was like maybe if you have a bearish or bullish view on a certain thing, you have like a 1% or 2% allocation. I imagine that's going to change dramatically in the next 5 years. And I'm curious if you're starting to see that at all already.
Without a doubt, we're seeing that. It's a really good point. And even this move that we're seeing in the last 2 years, the retail public is still asleep. I'd say some family offices are waking up. Some have held gold in Switzerland in the past. A lot of that gold's coming to the U.S., so we're working with those types of groups. The reason I created the Wyoming Reserve was as a stock offering that's being offered. So we're FINRA, SEC, we're being offered through the broker dealer community, is because there's very little optionality. And buying physical metal, for those that understand it, it's very simple, but it's kind of like buying Bitcoin for the first time. It can be a little daunting unless someone's walking you through it. So how do we make products easier so that company's really intended for high net worth? And so we're seeing it there, where they want the upside of a company. So it's essentially a hybrid between what strategy does and what an ETF does. We're a C corp with tax advantages that holds 90% of its physical its balance sheet in physical metals, and we're mark to market every day. We strike a new stock price each quarter, and then we can go up to 10% in digital asset. And so we've got a mechanical strategy of when we're holding Bitcoin, and the idea is that we're holding pristine assets, and then we're also a business that can make business income off of those assets, whether it be third party vaulting, metal turn, et cetera. So that is really intended for the future. And we saw in the Big Beautiful Bill, they just made OZs permanent, which is I'm like, oh my gosh. So almost every OZ fund out there is real estate. It's not possible. And based on the rules, you couldn't have 100% digital company and have the opportunity zone benefits. So, I see that growing. The demand is going to grow because it's always been stocks and bonds at whatever ratio, and bonds have been complete trash. So for quite some time, they're doesn't look great for a lot of reasons.
The last time we chatted, I know we have to jump, but the last time we chatted, it was the most fascinating capital formation I saw with your firm. I think folks should reach out, look into it. And then the other thing that you said, jewelry, I'm assuming something closer. I don't think a lot of people know about Mene, but I tell the guys, I joke around, I have Mene just on me because if I ever get stuck in a country, I have, some cash that's not cash. And I would imagine there's something similar, and that's such a great margin because they get to mark it up 30 to 40% and then send it back. And they're not widely known. I would imagine you have some distro for that.
Yeah, our jewelry would be a little different. So we create so much metal scrap here, just producing the bullion product, that the big jewelry companies that have to tell their shareholders they're ESG compliant, recycled goods, they are clamoring for us to produce things for them. So we'll probably do, traditional jewelry, the investment jewelry. We'll be doing silverware, but stuff that looks good in your home today. Maybe it's Art Deco, or has a new vibe that doesn't look like grandma. So really, at the end of the day, we hold the metal, we move the metal. It's audited. We supply governments, people. We have a division that sells on eBay, Walmart.com, all sorts of places, and then we supply, hundreds of wholesalers all around the world. So really, we're in the business, and there's just spokes on the wheel. And yeah, times are changing quickly, so it's going to be an interesting decade ahead.
Awesome, Josh. Well, pleasure to meet you today. Appreciate the time. Where do you want to send people that want to get in touch with you?
Yeah, check me out on X, Josh Philip Phair. I'm on X. The two companies I mentioned, Scottsdale Mint is the manufacturing company. If you want to go to thewyomingreserve.com, if you're an accredited investor and interested in the next offering, or just checking out what it is, we'll be announcing that here in a few weeks. So those are
follow Josh. He's a great follow. He had some awesome stuff about 6 months ago tracking where all this gold was moving around. So appreciate you joining, Josh, and look forward to catching up again.
Thanks, guys. Thanks, everyone.
Thank you, Josh.
All right. Thanks, Josh.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.